It's end of May, tax season is behind us. But if you're in construction, now it's a time to make your next move. And this year, as you know, the tax game just changed again. The Senate just passed what's being called the One Big Beautiful Bill. Yes, that's the actual name. And it's heading to the House now. But even in draft form, there is a big stuff in that proposed bill that you can act on now, especially if you own a construction business. So here's the headline. Full bonus depreciation might be back. If this bill passes, you'll be able to write off 100% of equipment and vehicle costs again for anything purchased after January 20th, 2025. So think about backhoes, pickup, trailers. You buy it and you write it off, all of it, through 2029. So if you're even delaying a big equipment purchase, this could be your green light. But wait until this passes the House, because before you pull the trigger, we never know. Time is a key. And you know that 20% pass-through deduction everyone talks about? This proposed plan pumps up to 23%. So if you're an S-Corp, LLC, or a partnership, that's real money, especially in construction. As we know that margins swings, any breaks in the taxable income means more cash stays with you. That's money in your pocket. Now, this one's sneaky but huge. And I know a lot of our clients are waiting for this one. If you've ever re-engineered a building process or used new materials or tweaked a project method, you may qualify for what's called the R&D Tax Credit. The new proposed bill says that you can fully expense those R&D costs again, no more 5 years amortization. So for construction clients and renovators and design firms, this is a breakthrough tax win. If you're a high income earner in high tax states like California or New York, here's a story. SALT cap going up to $40,000 from $10,000 that was enacted in 2017, but phases out over $500,000 in income. And yes, there is a new rule that gradually takes away your deduction if your income is too high. So if you're pushing past that $500,000 mark income, it might be time to restructure how you pay yourself or even how your business is taxed. Now, I've got some good news for contractors and subs. So listen up, there are some really great news if this bill passes. The 1099 NAC and 1099 miscellaneous thresholds jumps to $2,000 and 1099K wouldn't even apply unless you hit $20,000 or 200 transactions a year. So what does that mean to you? It means less reporting, less noise, fewer forms, cleaner books, especially helpful if you're juggling platforms, have a lot of gig income, multiple projects, client reimbursement. It's basically less headache for everyone, for you and your accountants and your staff. Normally, I would say don't miss that June 15th opt-in deadline for California PTE tax credit, where your S-Corp or partnership can pay your state tax and you turn around and you deduct it on your 1040. But with that new proposed bill, the SALT cap proposed going up to $40,000, the benefit of the PTE might disappear if this bill passes the House. So my advice right now is hold off just a little longer. Let's see how this shakes out before locking up your estimated payment this year. So listen, the bottom line is whether there are some tax changes coming up in 2025, 2026, if your job costing sucks, your tax strategy will too. I've seen guys overpaying taxes by 5 figures just because they don't understand how accounting works. They lump labor and materials into one big QuickBooks categories. Let's make 2025 the year to get your books project ready. Clean data means smarter strategy, period. Here's the last thing. If you're running an S-Corp and paying yourself a tiny salary while pulling out massive distribution, the IRS still cares. Even if you get a tax cut, audit don't go away. So keep your payroll legit or your tax saving could turn into legal fees. Look, this new bill could reshape the next 5 years of our tax life. But Congress isn't done yet. So don't make any major moves until it clears the House. In the meantime, get your job costing right. Review your pay structure. And if you're in California, wait and watch on the PTE before committing your cash. Don't wait for the IRS to tell you how you're going to end your year. Book a session here with us at BostonCPA.com. We're more than happy to help. Let's get you ready before it's too late. Want to thank you so much for watching this session. I'll see you next time.
This has been another episode of our tax saving video series. If you enjoyed this video, please like it, subscribe below, and share with other business owners. You can find previous episodes and more information at www.bostocpa.com. Thanks for listening, and have a great day.